This is not advice. I'm not your advisor. Hello again. Let's do some questions. Husband getting vested company stocks. Need help understanding or reducing tax liability. Your husband's getting company stock at the end of February. You haven't had a financial asset like this before, and you don't know what you can do to minimize your tax burden. You want to take the stocks and diversify them, but you also want to sell some for money. You don't know how taxes work. You don't even know who you should speak to. A CPA? Yes, a CPA. Some would be very large. The original value of the stock's to 120K. It's much higher now. So you're hoping the market holds it together. I'll hope so for you. Fingers crossed. Can you help us? Yeah. So there's really only two types of people I would help you with this. So CPA, you'll definitely need to understand the taxes. There's no substitute for that. You got to find a good CPA. A financial planner could help you with kind of the longer range planning parts of it. If it's a one-time shot, CPA could probably tell you everything you need to know. But yeah, you just need to talk to a professional. It's probably going to cost you like $200 an hour. Probably going to take a few hours to explain it to you and go through the stuff. But if it's really this much money, it's certainly going to be worth it. So that's what you need to do. My dad outlived his life insurance policy. Any way we can salvage money from the premiums? Your uncle's a life insurance salesman and sold your dad a policy before you were born. Your dad was new to the U.S. He migrated from Vietnam. Bought one so that by the time you're in your 30s, be set. Long story short, you take care of both your parents at the age of 27, and the life insurance policy ended. So was it a term policy? He's still going strong, okay? He was paying $520 premium semi-annually. $1,000 of term life? How much was this? Is he able to salvage back any money you went to the policy, or is it gone? Jackson National is actually like a reasonable provider. Prices are reasonable, costs are reasonable. I don't really like insurance, but it's reasonable. Let's see. Are you going to give me any more information? You're in the process of taking out $22,000 from your mom's life insurance, as the value of that benefit is only $100,000. You can probably invest in an index fund to get the same return, if not higher, by the time she's 95. What? Do you have power of attorney? What's going on here? Your parents argue all the time over the fact that your dad made a misinformed financial decision. You just want your parent... Well, if it's a term policy, the money's all gone. If it's whole life or universal life, then there's a cash value, and it should say it right on a statement. Okay, let's see what else we got. So your brother is the owner of the policy and your dad's the insured person. You're the only one that speaks English fluently. If you ever get any money back from the company, you plan to invest in an index fund for your parents. Yeah, I mean, if it's a term policy, it's just gone. That's like really expensive though. And it should be really obvious to you if there's a cash value on any of the statements. So, I don't know. I'm confused because the premiums indicate it was a whole life or universal life policy. But the fact that you said it was a 20-year policy term makes me think it was a term policy. So, I don't know. 401k loan for down payment. How can you get an opinion about using 401k funds for a down payment? Looking for philosophical answers. You came to the right spot, buddy. Male, 25. You make 80K a year. You got 34K in the 401K. You contribute 10%. Company matches 6. And you got 23K in a high yield savings account. You're expecting a windfall. I don't think you can expect a windfall of about 10K in 2 to 3 months, and you'll be putting that in savings as well. Before you ask, yes, that includes emergency fund. Yes, you're planning to save more. Okay. Looking to buy a house in the next 2 years. Based on your area, you'd be lucky to get something from 250 to 300 Atlanta. You're happy to put down 10 to 15% or 20% if you find something you good value. Well, you should probably put down 20% if you possibly can. Does it make sense to borrow a portion of the 401k or just diligently adjust things up to the rate of savings? So here's the deal. Most 401ks let you borrow up to 50% of the balance on the first $100,000 of balance. So if buying a house is really important to you, you probably need to beef up what you have in savings. So you should probably think about, make sure you get the match, but maybe reducing the contributions to beef it up if that's really important to you. Otherwise, if what you want to do is keep contributing what you're contributing into the 401k, and then when the time comes, consider taking a loan, and if there's not quite enough, you'll wait a little bit longer. It seems fine to take out a loan. I don't see any problem with that. Do keep in mind, if you leave the job that you took the loan from, the loan is immediately due. So make sure you got a little backup plan in case of that. But yeah, that seems fine. I don't see a problem. What do you do with worthless stocks? You took a long shot and purchased a few shares of a company that has since had a reverse split, leaving you with a single share and is literally worth a fraction of a cent. How can you get the share? You can sell it, and then you can, once you sell it, you can realize whatever losses there were, assuming this is a taxable account and not a retirement account, like a traditional or Roth IRA. So assuming you just bought it in a regular brokerage account, you can sell it, and then I don't know how much you lost, but if it was a little bit, you'll be able to offset wages. If it was a lot, you'll be able to offset other gains. You sell them. You harvest the loss when you want to harvest it.